Welcome to the StockMiner.com studios. I'm your StockMiner Brian Johnson, and we got that move up. Bulls decided this was a good buying opportunity, and they decided to buy the market up. Really, if we want to just look at the markets for what they are right now, they're really moving a lot based on the dollar. The dollar took a pretty big move down this afternoon, so there you have it. Move down in the dollar, move up in the markets. Bulls just finding a way to always buy this thing back up, which is what I cautioned against yesterday. We had a pullback of sorts yesterday, pretty decent red candle, but it's just one candle. So now we've got to move back up. We didn't break to any new highs or, scream to any great reaches by any means. Still an opportunity for a bigger bear move down. Obviously, depending, I think, on what the dollar is going to do next. But you're going to have people now, they're going to look at this and start talking about a potential inverse head and shoulders. So we will bring that up right now, and I'll just go ahead and dismiss that as it doesn't really matter if we don't cross this 11,150 mark. So unless that gets breached, I wouldn't put any really big emphasis on the inverse head and shoulders type formation that we are starting to form up here after today's market action. You can see from a daily on the Dow that we had that big move yesterday, retest the 20, and the straight move right back up today. So the moves have been sideways for the last 2 days. However, they've been big enough intraday to at least do some kind of trading. There has been opportunity both yesterday to go short, today to go long. At least the market's moving. It's none of these 5 points high to low or 30 points high to low in the Dow as it might be. At least we're getting some real movement to the market, and it is staying in a particular trend for the day, which really, really helps if you are an intraday trader. So 2 days so far have at least given us something to play around with. We can now watch this, once again, the overhead area of 11,200 to 11,250. Be very cautious up in that area too, especially if you're going to take a long over and above that. By all means, please don't be afraid to do that, but you better keep a stop in place because we don't want to get caught in one of these again, where it went up, comes right back down, and then decides to move the other direction. Don't get caught in that. Be very cautious with your trading. Over the next few days, I am still cautiously bullish, however, have seen nothing broken to the bull or from a bull side. Now that we've seen today's action, everything's kind of right back in the bull camp again. The NDX yesterday, nothing really was ever broken there from a bull side, but you can see where it is now starting to consolidate for the last few days, finding its next move. Unless we get a break back below the 2040-ish area or the 2020 area, still got to remain neutral to bullish on the NASDAQ market itself. You can see here we're watching that 2100 area, 2150 area above us for the next overhead resistance, and trying to hold the 2060 area for the week. So far, bulls doing very well on that account. You can see the weekly still moving sideways, putting in what could be. Obviously, we've got a few days left, but look at that, starting to form that high base type of a look again. Move up a little bit, move sideways, move up a little bit, maybe move sideways. We'll see what the candle looks like at the end of the week. SPX on a 60 doing that same thing too. We can start to make out potential inverse head and shoulder patterns. Here was the move here, 1, 2, 3 from yesterday, and then here was the move today, straight up. So the market not wasting any time whatsoever in dragging that thing back up. The dollar just cannot find its footing, and as long as it continues to suffer, the markets will continue to move themselves upwards. SPX on a daily here, we're just playing around with this 1170, 1175 area. It's just a constant back and forth as the pundits fight for position. You can see we're holding above it, was important for a few days. Then we had yesterday's move down. The bulls wasted no time in getting back up above it. If you follow me, you know that I like to give the bulls and or the bears at least a day to try to make it up. If they lose ground like the bulls did yesterday, I give them at least a day to make it back up, and they wasted no time. So there just isn't a lot of interest quite yet to the bear side, waiting for those more major levels to be broken, and those major levels have not changed since our conversation yesterday. Watching the 1195 overhead area on any break above 1185, And then watching the 1150 mark on the way down here, that would be a major level to be breaking, and not a bad place to look to take yourself short if we get a break on the SPX of below 1150. VIX hiding out as it has been in this falling wedge that we've been watching. We got this one gap down below it. It quickly moved back into it and has been staying there ever since. So you can see the fear is in, it's out, it's back, it's forth. Overall, it's sideways to down. And that means the investors just aren't all that nervous yet. So we'll continue our stance of neutral to bullish within the markets. Apple was up $1 after seeing a little bit more of a turn. You can see it was up as high as about 314, hit that overhead blue line, and then started to kind of drop off the rest of the day. It's still trying to find its footing ever since the earnings, which took it back down to the 300 mark. If you guys held over earnings, you are getting some manna right here. This is just good fortune on your part to see it come back this far, this hard. But it is Apple. They did have a release today of some new items that they're going to be sending out to the public, and maybe now, and with Amazon about to report, or having reported, now you can see that Apple may be due for some sort of a larger pullback here. But until we see breaks below 300 and or more importantly 295, I wouldn't put a lot of stress on that for the time being. Apple doing very well here the last couple days, moving itself back up, trying to fill this area back here, this gap sitting up there around that 319-ish area from a weekly. Even though we had that major move down in Apple, you can see it's still only down about 1% for the week. Man, strength. Really, really, really strong. So we'll continue to watch this weekly and see if we get any kind of a drop to the downside. Like I said, 300 and 295, the numbers to watch there to the short side. FAS and FAZ are very, very simple right now. Don't play them. Stay out of them for the time being. They're chopping sideways. They're consolidating again as the banks, once again, they also try to figure out which way they're going to go next. And in return, we get to watch the FAS and the FAZ go up one day, then down the next, then up the next day, and then down. And then it's all the same type of motion we've seen for a while. You can see here the chop sideways. If you want to intraday trade these, once again, great, have at it. But from a swing trader's perspective, I'd stay out of it. These are very volatile. If you're not familiar with how to day trade, stay out of them. Wait for them to give you a more major break. Something up above here, something down below here, before you start to take those more major trades. From a daily perspective, you can see this is still working on this falling wedge. We've been kind of following this. Looks a lot like the VIX, but it's the same type of formation, waiting for breaks of either above this or below this to give us an entry one way or the other. So as I said, stick with your intraday plays on FAS and FAZ. They have been nothing but intraday plays for the last month, 2 months or so. Just ever since we got back in here, they've been useless for swing traders. Been not half bad if you day trade because they are volatile and move so much. They're not bad to play. But you got to be very cautious and really know what you're doing. Otherwise, you're going to get your hand chopped, especially when it moves sideways like this. Always be very, very, very careful with these. All right, so until we see more movement in those, I'm just telling you to stay out of them and or continue to day trade them. The markets move down yesterday, was brought right back up by the bulls today as the dollar seems to slip and slide and trying to find its direction. I think the markets will then give us their direction. Either way, doesn't matter which one you want to watch. Watch for those breaks of the more major levels. Once again, above this area here for a long, down below here for your short from the most conservative standpoints. If we continue upwards, this move is on borrowed time. It can crash tomorrow, it can crash next month, it can crash next year. It's all a guess, but there is a lot of risk yet to the upside from the standpoint of if this thing decides to turn, I think it's going to be sharp and it's going to be quick. So watch yourself carefully when taking long positions in the indices right now. I'll be back with you again tomorrow night. Take care of your money, and we'll see you again tomorrow. Bye.